lot of people are talking about the S&P being pretty much range bound. Right now, it's about 4150. What happens if we get those extra 50 points and break past 4200 in your mind?
Well, we would need to sustain it, that level above 4,200, right? It's what all of the technicians have been waiting to see for quite some time and kind of hanging their hats on as far as the signal to tell us that we're on our way up and to the right. But I think it's worth pointing out the fact that we're continuing to see we're continuing to put in higher lows, and that matters in the sense that the range is tightening around that level. We're at about 4,100 right now is where we continue to be persistent. So while we can't seem to break through the 4,200 level, we're definitely making our way upward as far as the trend is concerned. And so if you just look at the last 6 trading weeks, for example, we haven't really seen the week in up or down by more than 1% in either direction. If you just look at last Friday's close, for example, we were fractionally lower, but it was only a small fraction. And this week we're looking at what positive futures already telling us that Monday is going to start off on a pretty good note.
Yeah, and that's even with the S&P coming off a 2-week losing streak. So every day we ask Wall Street's brightest mind to share the word that they believe will describe the trading day ahead. Malcolm Ethridge, what is your WEX word of the day?
Yeah, so the word for me today is optimistic. I'm optimistic that we're going to get a debt ceiling lift. I think that Democrats do prevail in this case, and I think that that's going to be a very positive signal to the markets that's been kind of holding its breath. Knowing that we can't possibly default on our debt, but there's a difference between knowing and knowing, right? And so we just want to make sure that we get past this last little threshold. And then I'm optimistic also that we'll get a pause out of the Fed once we get all of the economic data that's going to come out of May. And so I think those two events occurring around the same time are going to be a very positive sign for markets and sort of that last little thing that bulls have been waiting on to be able to come in and buy this market back up.
So, Malcolm, love the optimism, love the WEX word of the day. But what have you seen that's giving you so much confidence we're going to see a pause? Job market very strong, according to the latest jobs report. And CPI, it was below estimates, but it's still well above 2%.
So I'm not necessarily trying to use the G word, right, guaranteeing that we're going to see a pause. I know about 95% of consensus from analysts seems to be baking it in, and also the fixed income market seems to be baking in a pause. But I do think that one of the reasons we can kind of hang our hat on it is that historically the terminal rate needs to be above CPI before the Fed is willing to pause, and we just got that. And so I think that history being our guide, we can look at that metric and say that this could be the spot where the Fed decides at least to hit the pause button and just kind of let the data speak for a few months.